Hi everyone. So, another 2 weeks have passed. Interesting 2 weeks, as expected. We have plenty of volatility. So today, Rafael and I, it's just two of us, but I'm sure we have a lot to talk about. I know that a lot of signals are triggering across the board. So yeah, let's start. So Rafael, I know that you had quite a few signals to buy the dip, and actually I prepared another rant about why buying dips is usually not the best idea depending on the regime. But yeah, so let's start with you. So what you see in the markets, how these 2 weeks have been for you, and what we can expect.
Hi, Vai. Yeah, good to see you. So, first of all, I want to say that the call we had 2 weeks ago was accurate. I mean, the idea was to stay in cash and to wait for a good opportunity related to equities. So, as for myself, for the intro, I'm still on gold. I unloaded some today, so I tweeted about it. I'm out of my Euro USD long, also tweeted about it. I tried to long NQ, but got stopped. I tried to long ES and got stopped today. So now let's go to screen share and I'm gonna show you what I see. Okay, give me a sec to set up everything. Okay, so let's go to ES first, but NQ will look the same. So last time we mentioned that we broke trend and we were expecting the sell-off to start. So I started to get some triggered to buy the dip actually on the 6th of March, but it didn't end up working. It's still triggering now. You can see here the arrows that are triggering. I tried to go long at I think it was 5,620 on ES, but got stopped yeah, today on the break of the low of the previous day. I had the same attempt on NQ on this time on the first buy trigger, but same, I got stopped out 2 days later. So the meme I use for for this show is because trying to short the top and trying to buy the dip are can be very painful process. Even though you have all the clues telling you that a bottom can happen, it can take time, right? So, so despite the fact that a lot of signals are triggering, we had, for example, on the 10th, we retested the low of the long-term range. We are basically testing the low of the range almost every day. The most important matter currently is the fact that we are bearish trend. It's much easier to buy the low of the range or the low of the long-term range when you are in a bullish trend. The fact of the matter is we broke trend on almost every single index you can think of. I think the exceptions being DAX and CAC, at least the ones that I'm watching. But also on all the stocks darlings that everybody like. As far as you can see, it's just bearish trend. So the reason I decided to try to time this to buy this dip is because the buy the dip script is built to handle that. I mean, you guys, most of you guys watching, you have access to my script for the buy the dip, so you know that when it triggers, it's gonna bounce. Now the only question is when. So we will go deeper into, for example, what the VIX is saying or what some other metrics I watch are saying. But yeah, my two attempts so far have not worked out well. I also tried to use options, also lost some money. So the what we said 2 weeks ago I think it's still valid. The best place to be if you don't want to try to time this bottom is to stay cash. So, so basically, yeah, I have a trigger saying buy the dip. We are at the bottom of the range, but one big issue, and this is the reason why I may want to wait, despite the fact that I have some signals saying to buy, is still no cap, NQ no cap, ES no cap, and every day the bottom of the range and the bottom of the long-term range keep dropping. So we are in the bear, guys. We are in the bear market, and I think it's gonna last. It's gonna be quite difficult for the next weeks, maybe month. So yeah, that's my take on ES and NQ so far. Now let's go to Europe. So as mentioned, DAX and CAC have not broken trend. So DAX has been quite resilient actually, but some things I mentioned in the past show was volatility of DAX was increasing, and it's now confirming. You can see here on the blue is the volatility of DAX. It's increasing. It has used the trade of volatility as a support, and volatility is rising. So my expectation for DAX would be that it's going to join the party of selling. CAC is already doing it. So I was long on the cross of trade and trend here, got out in this area, and since then it's going downhill. I was expecting volatility to rise, and this is what's happening. So CAC seems to be joining the party that we've been in the US. So the Nikkei broke trend before the last show, and I actually got a buy here. I didn't take it because I was focused on US indexes, but the same issue are also manifesting. No cap to the downside. Vola is still rising here, blue. So same. If you are a buyer of dips in Nikkei, I mean, apart the fact that signal is triggering buys, Vola is rising, no cap. So I would say, and I think Vi will entertain this part, is I would say it's a gamble. It's very, very tough call. Now I'm gonna go to DXY. So in the last show, I drew those arrows. I was expecting, I think we were here, I'm not sure, but somewhere here. And I was expecting a retest in this area, and then people would realize that the trend actually broke when it actually broke there, and the move would accelerate. This is what we got. So you can see here clearly people just decided to discover that DXY was bearish trend. I exited my long Euro USD position, which was my way of expressing the fact that dollar was about to experience the trend change and confirm it, because you have a cap now on DXY to the downside. I know my tools, and I was seeing that it was oversold. I was expecting a buy on DXY to manifest. Actually, the buy triggered on the very next day. I unloaded my long Euro USD. So the cap is there on the DXY. I'm not saying the move is over, but if you are short dollar and long Euro USD, no matter the way you express this trade, I think the next days, weeks will be very important to watch. So this was my Euro USD trade. I went long here and got out there expecting the sell to manifest. So they did. So my expectation would be, I'm not saying the move is over again, but my expectation would be at least some kind of pause, maybe a retest of MFR trend before we can reassess if this trade is still valid. So if you were long with me on the Euro USD, I hope you saw the tweet and you got out, and that now you are waiting for maybe another opportunity to get back in, or just to wait for another trade. So now let's go to VIX. So the issue I had with VIX on the last show was that it was very difficult to read. The problem was that trade of volatility had been quite high since November. Volatility was quite elevated, and the spread between trend and trade, sorry, was quite large. And this kind of scenario is very rare. So what we are starting to see right now is actually something much more normal. So you have trade and trend that are nearing each other, and volatility is going to at least reasonable levels. So now there are basically two paths for this. The first path would be the usual one. Trade, so the black line will go to the first, at least the first minimum value of daily trade. So you know my thing again, I go in the past, I look where trade of an asset has been to before we see the volatility unable to continue to go lower and start to pop. So if you have marked these values, so this one is 22.4, this is the first one. If you are using my script, mark this one, 22.4. When trade of VIX will go there, this is where I would expect VIX to top. Okay, so you need to mark this one. This is the first scenario, and how it would manifest. So it would manifest very dramatically, because it would mean that the trend of MFR is confirmed, and now a floor of VIX, meaning one last squeeze is a possibility. And you can see the long-term range, the top long-term range on VIX is actually quite scary. So that's a possibility. Another possibility is simply that we are back in a more normal place for volatility of VIX, and the market would just start to behave more normally. So maybe I can give you an example. So this is what you get here, for example, when trade and trend cross. So sure, volatility is back down, trade is down, etc. But at least VIX is contained. So the two scenarios I would watch are either we are unable to break MFR trend and we use it as a floor, meaning you should expect another squeeze, one last squeeze on VIX. And you know what it means for market. Or we are just back in a normal, a more normal scenario for VIX, meaning we are finally escaping where we were since Trump victory. And sure, you may get some few moves on the VIX, but a return to the area of 18 to 20 would be to expect. So of course, there is no way to know the future, but this is what I'm gonna watch for VIX. I'd say the scenario I think is the most plausible would be that trend of MFR will be used as a floor, and one last squeeze can happen. So will it take a few days? Will it take maybe a fake bounce to trap people? I don't know, but that would be my my expectation right now. Now let's go to oil. So last time we mentioned reject 3 times MFR trend. Finally got the nice move people were expecting. I got a buy triggered on the 6th of March. Of course, I'm not taking it, but a counter trend rally could happen. So if you were short, I hope you saw the buy, and that at least you covered a big chunk of your short position. Now let's go to my favorite asset, so gold. So I started to add on the retest of trade on the 27th, and I did on the 28th and on the Monday on the 3rd. So we got the move we were expecting, and because we already reached daily mean one here, this I think it was I marked it wrongly, but here on the 24th, this is when I unloaded some more. I decided to sell the ad and also sell half of the original position I had left. So now I'm just enjoying the show for the last part. I'm actually looking for 3050, 3060 to unload some more and to move my stop in this area. So the low of the 11th of March. I think the meat of the move has already happened, and I'm probably gonna close this position if trade reaches daily mean 2. So daily mean 2, I think it's 1.9. So again, if you are using my scripts, I repeat those levels at every show, but mark them. They are your triggers. Actually, silver had if you took the trade here on the retest of trade, you had a very nice move. So my thinking for gold can apply for silver as well. Now Bitcoin. So for Bitcoiners. So the trend break had a huge impact, right? I mean, the sell-off since trend break confirmed at 96,000 was followed by a decline of almost, I think, 20K. Yeah, almost, yeah. So shattering for Bitcoiners. I'm starting to get some buy signal on Ethereum, and actually the level of volatility of Ethereum is approaching levels where you usually get a dip. So I'm not gonna buy this one. I'm not gonna buy the dip on Ethereum, despite the fact that I have the buys, despite the fact that the volatility is at levels that would justify a buy. Also, we have caps because I'm not sure about what volatility can do in the next days, next weeks. I would need to get a confirmation that volatility is finally under control before touching any risky assets. One thing that we nailed also from the previous show was the trend change in yields. So I'm gonna use the US 10-year, but if you have all our scripts, you know what to look for and you know how it looks. So we reach mean daily trade here. We got the start of acceleration of volatility since then, indicating a phase transition. We got the retest of trend and finally the break. And then the start of the move. Looking at the volatility history of the US 10-year, my expectation would be that volatility is going to keep rising. So holding long bonds since the trend break, or at least since we talked about the phase transition, is still, in my opinion, a good long. So a good long to hold TLT, DV, zeros, no matter how you express this bet. But sure, you could have taken some profit in this area as we touched the low of the range. We had oversold here, and we had a cap for a few days. But my expectation would be that volatility is still gonna rise, and US 10 years, 30 years are gonna keep dropping, meaning your bond position are gonna keep working. I'm gonna show you TLT quickly. So I also mentioned 2 weeks ago that when you start to get the trend and trade cross, this is when the real move is gonna happen. So TLT retesting MFR trend. My expectation again would be that now we should get a cleaner move up on TLT. I mentioned that usually during the phase transition, you get this kind of chop. And then when you have the trade and trend cross, this is when you get the clean move. So matrix for now is still going down, but as soon as this thing goes green here, my expectation would be that the move higher on bonds is gonna be much cleaner. So that's my expectation. This is what should happen. Of course, monitor the trend, and you should be long since this area, so you're already in profit. And now what you are looking for is the real move to start. I want to show you quickly also some tickers I'm watching. I mentioned them. I mentioned them repeatedly on Twitter. I haven't in quite some time, but I watch these tickers. It's the number of stock above their daily moving average. So the 50-day. This one is Nasdaq 100. The Russell 2000 stocks above their 50-day average. And I have actually some triggers there in yellow here. You cannot see them clearly, but I'm getting buys, mega buys, and they are reaching my minimum targets as we speak. For example, this one is percentage of stocks above 20-day average. It's already below the mean I marked, and this means they work during the 2022 crash, and we're almost there. I mean, we're almost touching. This is why I'm saying. I mean, I'm expecting a bounce, but it's very hard for me not to play it. But the problem is the VIX. I don't see volatility under control yet. Just wanted to mention that, but these are also some clues and why I decided to play the bounce the past week. So you can see even me can be wrong, right? Now let's go to tickers, to single tickers. So all of them broke trend. So this is everyone's darling, and VDA same got buys. This one actually worked nice if you play the bounce, but it's bearish trend. Tesla got absolutely smacked. We tried to buy this deep and then just crap. And Raghav mentioned that he saw the cap to the downside manifest. This is a good clue. The issue is, you are trying to buy a bottom. So if you are doing that while we are in bearish trend, know the risk. PLTR, it's a vice favorite stock. Also confirmed bearish trend. Microsoft, bearish trend. Google, bearish trend. Meta, just confirmed a few days ago, bearish trend. Apple, tried, failed, and poof. Amazon, bearish trend. So to conclude my part, I want to reiterate again that you are trying to buy a dip while trends have broken. It's not the same thing as trying to buy the dip when you are in a bullish trend. Okay, so you keep that in mind, and it doesn't matter much because we were playing other assets like gold and the dollar play. So we had a good 2 weeks. But yeah, keep in mind, if you are trying like me to buy the bottom, it's a dirty business. Okay, thanks.
Yeah, great insights. Yeah, I also agree. I believe you mentioned when you were talking about the VIX that it's actually quite normal, and I will talk about that today. That actually the sell-off, at least for now, everything is actually going down. So respecting the move and trend down in a very normal way. It means dispersion is a big capitulation is not even close. I saw some people were already calling that everyone is capitulating. No, not at all. We're not even close to that. And the way how VIX behaves in general and how these moves happen on an intraday basis. Yeah, also, everything is not in a panic mode. We can be quite close to some point in this move where bigger sell-off can trigger, but now actually this unloading is happening in very orderly manner. And yeah, so I'll share my screen. I will start from something funny, actually. But yeah, I think that, yeah, so just like what an hour ago, I received a notification from Financial Times that our good old friend, President Elon Musk, is not happy about what Trump is doing. So yeah, just I thought that, yeah, I was laughing. Of course, it's quite an obvious thing to expect, but I thought, okay, I'll start with Tesla. And Raphael already mentioned, yeah. First topic was that almost nothing has caps, but yeah, Tesla has a cap, quite almost the only thing from bigger stocks that has. But I think that in this situation, now I'm not talking about market signals in general and what's happening, but in this situation with US politics and what is going on, actually, Tesla can be quite a good indicator about what market thinks about all these things that are happening. And if we check peaks troughs, basically Tesla now is 50% down from its recent peaks that happened sometime in December 2024. Let's call it that. So yeah, of course, Tesla reached its peak after the election. No surprise there. But yeah, it's quite a good indicator about actually all the opinions coming from the market. And yeah, no surprise, Tesla is not happy about those tariffs. So yeah, we will start with correlations. As always, today I made sure that my trading view works as expected, because 2 weeks ago I had quite issues changing settings and timeframes and everything else. But yeah, we have some news also. Some news that a lot of people were asking about Hearst exponent when it's coming to trading view. So actually it's coming soon. You can already see it, and I will touch on that both Hearst exponents will be available on TradingView. And yeah, if we're talking about Hearst exponents, look at Tesla. Red number is 3-month Hearst, and blue number is 1-year Hearst. It's a huge Hearst number, especially for a 1-year Hearst. So it's a very strong down move. Yeah, anyway, and correlation matrix, which is updating in real time, where you can change periods and add a current symbol, which is on a chart. Also, it will also be available with some other tools that we plan to release. But yeah, okay, let's start with 10-day correlation. This is I just want to make sure, yes, this is a 10-day correlation. And correlations are not too extreme. First, of course, before touching on a matrix, I always like to go to average sector correlation. That script is available for a very long time and absolutely for free. Even though average sector correlations are going up, but again, nothing too extreme. Current values at 0.67-ish are, of course, way higher compared to the levels where they were not that long time ago. But still, I definitely don't see any rowdiness, capitulation, panic, or coordinated sell-off. And if you noticed on Twitter these 2 weeks, almost every day I was posting these screenshots of SPX, which is a normal market cap weighted index, and SPW, which is a equal weight S&P 500 index. So for those who are watching ETFs, think SPY versus RSP. It's basically the same thing. And the performance, so the movements and the returns were totally different. What it meant that on most days when the market went down, this overall move down, of course, was caused by selling in mega cap stocks. So think tech, not only tech, but think mega cap. And other stocks were doing fine. And a couple of days ago, the exact reversal happened when we had this bounce. Now it's actually very funny to call it bounce because now it looks like that bounce never happened. But yeah, a few days ago we had this bounce. Actually, the situation was completely opposite. And of course, equal weight S&P was lagging, even falling, and SPX was going up. So yeah, basically, again, that bounce, it's gravity. That bounce happened in mega cap stocks because what falls hard, you can expect some bounces. And yeah, bounce today will be quite a big topic of my talk because what I see happening on Twitter, it's very dangerous, and I want to try to save people from big losses. And Raphael already touched on these things, so yeah, I completely agree. But anyway, so 10-day correlations. First, we will go to the SPY column, and the SPY column, you will see that things that have quite a big correlation are other major indices. So of course, small caps and QQQ, XLC. And XLK, I usually not even talk about that because yeah, weights are different, but you just look at QQQ and you can basically ignore that. And that's basically it. Tesla has 0.81 correlation. The way this matrix works, that there is a hard-coded list, and if the current ticker on your chart is not in that list, it adds that. So that's the only reason why now Tesla appeared in that list. But of course, we will not talk. But Tesla is quite highly correlated, just for those who know XLY. But how I think about the regimes, and there are plenty of studies that were done over decades and decades ago, and how I tend to view at the regimes, we are basically looking at different returns for different sectors. Yeah, so this thing I created for myself is just a very quick way to see the performance of all these assets that I think are important to understand what's happening in the US markets, what is basically the regime. And yeah, of course, no surprise. First, we will start from 1-year returns. 1-year returns, and okay, so of course, gold is nuts. That's Raphael is always talking about that, so we all know that gold is already nuts. But let us think about equities for now. And yeah, XLC, XLF, this one is no surprise because of potential deregulation. Funny enough, nothing is happening on that topic. It was a big topic during the election, and now apparently we need to wait for that. But XLU, and I know that we talked about it with Ted and many times during our talks, but I prefer to watch XLU. Some people say it's XLP works better. From my experience, XLU is very good indicator to understand where we are. And yeah, basically, so of course, XLU is going through the roof. Then we will compare these current dips. If we go to monthly returns, so yeah, of course, when it comes to equities, you will see a lot of red, but still, XLU relatively compared to its peers is doing quite well. XLU minus 2.5% in the last month. When we know what happened in the last month, we know that, for example, SPY is down 8.9%, QQQ is down 11.3%, IWM even more. So yeah, defensives are still doing quite better. For example, the election topic, financials and deregulation actually are not doing that better at all compared to the SPY. It's basically down 8%. So yeah, and 5 days is basically the same. I mean, XLU is green, XLU is green, XLE is green. Like I said multiple times, I don't usually think of XLE as something related to overall market. I think of it as its own thing. Even if I trade it not because of some view on the overall market. I trade it more like just a separate thing, view on the energy, oil, and other stuff. But yeah, bonds. Everyone loves bonds, and we see that starting from 21 days, of course, TLT is green. Yeah, so there was a question on Twitter about the regime. So I want to tell people that I'm basically looking at two things. It's a bigger combination of how I look into to these things, so different time frames, different periods, and so on. But I basically look at two things. When it comes to a specific country, so in this example, US, I look how different sectors are moving together. So cyclicals, defensives, then of course factors like high beta versus low beta and so on. But I just want to understand when it comes to equities, where capital is flowing. Is it a coordinated sell-off? In the case of bull markets, is it a coordinated buying, or is the market move up or down driven by just some mega cap stocks, for example, or just some sectors and so on? Gold is cool, but I will not talk about that. About gold, I am not an expert on that, so yeah. But basically, based on macro and regimes, how a lot of people are viewing it, gold just confirms what I said with XLU thing, that basically now we are in a risk-off environment, and definitely not in a risk-on. Basically, everything, like Raphael said, is in bearish trend and so on. And yeah, so this one, and another thing is, of course, stock-bond correlation. So for stock-bond correlation, I will just go to TLT. And when I have this thing, it's just a correlation to SPY. For me, it's a lot easier to view. And the red line is stock-bond correlation. Blue line is beta. Ignore that thing for now. Yeah, but basically, if we are looking at very, very long terms, so this is a 252 days, of course, 1 year, basically there is no correlation for stocks and bonds. And that is something that you would expect, because if we view a very, very long time, again, check the red line, ignore the blue line. And when this regime changed, because I know that people were talking, but let's remember the year of 2022, and let's remember the period of end of 2021, beginning of 2022, and when we all, not only us, but other people as well, were calling that we are in a very, very bad scenario. And basically, usually what I call a normal regime, which we have not had for a very long time, for years, normal regime would be negative stock-bond correlation. I touched on that multiple times, and other people too. But that's why I'm looking at a very, very long period, which, I mean, 252-day correlation, let's be honest, it's a very long period. But yeah, and we were in a normal regime. We were in a normal regime, and of course, in the end of 2021, this correlation went up quite quickly, and it went up. Then it started. It became negative, but quite low negative, because, like I said, how I view correlation. I mean, in the bounds of, let's say, 0.1 to minus 0.1, I call it. I mean, it's almost no correlation. How I call it, because, yeah, you know, in academia, no correlation means zero. For me, up to 0.1 is basically no correlation. And then we entered this beautiful thing, and we all know what happened in 2022. So honestly, now we are in, when it comes to the longer term regimes, we're still in a, let's call it not normal, but not terrible, because terrible regime is a strong positive stock bond correlation. But of course, we need to look into periods that are leading, because long-term correlation is obviously, it applies not only to correlation, to any other signal. I mean, if the look-back period is long, it will be slow to react. So of course, we want to front-run the possible change. So now let's go. So this is a 1 month. So let's go to 21-day correlation. I know that setting was called beta window. I mean, it affects both. And yeah, so this red line, yeah, again, there's absolutely no correlation between SPY and TLT currently on a 21-day rolling period. But if we go back to negative stock bond correlation, which I expect we do, because finally we have this move, opposite move of stocks and bonds, which of course is more normal than not. And it's a good lesson that normal regime doesn't mean bullish trend for equities. Normal regime means just that, normal regime. So if it's a negative correlation, it can be both ways. It means equities can go down and bonds can go up, like we see now, or equities can go up and bonds can go down. So don't think when I say that stock bond correlation regime is normal, that I say that equities will go up. I mean, it's not how it works. But yeah, so these are two things. Yeah, we can actually go even lower, but it will be very volatile. Yeah, it will be very volatile, but you will get the point. And in 10-day correlation, we are already negative, and now you can expect a 21-day correlation to go with that. So that's one of the reasons why I said that this sell-off is normal. I mean, for now, nothing is like too overcrowded. Nothing is very coordinated in all equity sectors, stocks, and anything else now. So it's a two-edged sword, because what I said, it's not capitulation and everything is normal. It means that the sell-off can continue. The sell-off can continue for quite a long time, and usually bottoms happen in these regimes. Usually bottoms happen when no one wants to buy the dip. Just keep in mind. Now on Twitter, we see a lot of people that want to buy the dip. When it's a bottom, and you can study how things happened in 2008, 2009, then in a dot-com bubble and so on. Bottoms happen when no one can even think about buying stocks. Now a lot of people want to buy stocks. So yeah, just keep that in mind. And I'm not calling any, recessions, depressions, 50% move. But like last show, I believe, we asked each other what we think, whether we will get a real crash or a small correction or so. I believe that all of us said that it will be a small correction, which is like 10%. Well, guess what? We are very close in S&P to that 10%, and QQQ is already there. IWM is already there. So we will see. For now, I see no signals that it's a bottom. based on statistics and how markets move in general, of course, now we have quite a decent chance of a pullback. But again, what statistics and history shows us, for example, everyone can just Google when we had biggest moves to the upside on a percentage basis, daily moves in S&P or QQQ or whatever. Well, you will find out that biggest up moves happens in the middle of a bear market, because what falls hard bounces, but it doesn't mean that it's a bottom. So I just wanted to say that we have, of course, after moves, let's go back to equities. After moves that we have quite a decent probability, after we have multiple down days in a row and so on, we have quite a decent probability that we will get some big green candle or multiple big green candles, or not necessarily big, but multiple green candles. It's just gravity. I mean, and then if nothing changes, yeah, after those green candles, we will make new lows. That's how things work. So I just wanted to touch on that because it's quite an important thing. Now, what I'm doing and what I'm thinking, because the main view now is that definitely we are in a risk-off environment. Bonds are by the dip. I believe I said that 2 weeks ago also. Let's come back to the dip. So now, actually, I like it because we had a dip. So I agree with Raphael that now your bond positions should work just fine. And how ranges look amazing. Still amazing. Yeah, it's almost a cap on the top, and the longer term bottom is quite far, but we still have plenty of upside on a regular term basis. Markets are in a kind of chop scenario, neutral bullish, but other than that, I still think that what Ted and Raphael said multiple shows ago, when they said that most likely it's a bottom in bonds, now I'm basically sure, because I usually, you know me, I usually like to wait for a more stronger signal. I don't try to call bottoms or tops, but now I agree with that. Absolutely agree. We'll see what happens, but I think that bonds are by the dip. But what I like usually to do in these scenarios, that's why I said that bonds are not buy, but by the dip. Usually, I don't like to buy assets when there is no dip, like here, for just an example. But now we had some dips, so I think that bond positions should work. So yeah, that's the regime. Now, what retail traders are doing in general, and I see a lot of that on Twitter, and not only on Twitter, and I definitely know that some of our users are doing that. So I want to save some nerves and money and capital, and I want to show why when we are in bearish trends and in a risk-off regimes, buying dips is not what you want to do. So of course we will start with the SPY. Good old stamp SPY. What is this? Anchored VWAP. Let's get rid of that. So what happens? Now we will look at the ranges, just ranges. And for now, in the beginning, we will start with only regular ranges. These colors are MFR trend. It just makes it easier for me to see things. So it's the same that you have, just a different visualization. So almost every day, and what I now was doing with futures options, usually, so almost every day, when market comes to the end of day range is the one usually above and below the current candle. the one to the right is always the range for the next period. It's forward looking because that's what it is. Otherwise, it would be a lie, and the ranges would never break. So that's how you need to look at it. End of day range is here. Tomorrow's range is here. So now let's look at end of day range. Almost every day, when market reaches or comes relatively close to the end of day range, you get either a end of the move for that day or some sort of bounce. And what I do in these cases, and don't do that, please, but some people are interested. Risk disclosure, not advice, and don't do that at home. But what I do when I see that, then I sell 0 DTE out of the money put spreads, put credit spreads, limited risk, but with strikes A, way lower than the end of the range, B, expiring on that same day, and C, of course, only if we still have a reasonable amount of time in the day, so let's say a couple of hours. And it worked every single day, even in this day, because with this implied volatility, you can sell, even in 0 DTE space, you can sell way out of the money options, way out of the money and still collect some. So now, why when starting about not catching bottoms, I actually said that I'm selling spreads, which can be hard to understand. But I know that some people are buying when we are in bearish trends. They are buying closer to the end of the range, and then they are holding overnight. What that view is, and why is it different from what I just said? Their view is that it's a bottom, literally. They are predicting a bottom. It means they think at any of these candles that it's a bottom, and from now on, market will reverse, and we will have a move to the upside, which, as you can see, not what is happening. And it's absolutely normal. We are in a bearish trend. Top of the range and lower of the range are basically almost always are making lower highs and lower lows. Almost every day we are testing that regular term range. First exponents are quite big, especially short term. We see 0.75. This market has trending characteristics, persistence from Hearst's perspective. What it means, basically, that positive values tend to come after positive values, and negative values tend to come after negative values. It means that if market is falling, most likely tomorrow it will fall also. So that's what it is. So what's the difference? Because of course I'm a trader. Volatility is a trader's friend. I like, of course, to do things because that's my job, not staring at the market, but also doing something. But what is the difference? Even if I think that for that day the move is overdone, I do limited risk. It means my risk is limited. I can't lose, even in a worst case scenario, can't lose more than I planned. B, these positions are always closed, or in most cases, they just expire worthless, which is the same. But these positions are always closed on the same day. I have no exposure overnight. It means when I wake up in the morning, well, market can be down 10% or up 10%. It's okay, absolutely okay. So again, like I said, it's a disclosure. Don't do that. You need to understand what you're doing, but don't catch the bottom. And if you do, for one reason or another, do it in a risk-managed way. And we have a lot of risk in the market, not only headline risk, because now, one of the biggest risk is headline risk. I mean, Trump will say something, there will be a headline on Bloomberg, and everything will go down in Globex overnight. Yeah, so it's a headline risk. Of course, geopolitical risk, but it's nothing new. I mean, we have this risk for a very, very long time. So no. Third thing, especially it applies for tomorrow and the next week. We are in the rollover period. It means in indices, in major indices, a lot of the moves will be not because of overall what's happening in the markets, just because that capital needs to move from March contract to June. And during rollover periods, you get a lot of erratic moves because, of course, there is a time difference. There is a spread between March and June. And believe me, those who are long, they don't want to pay that entire spread. They want that spread to lower. They want to roll over at better prices and so on. So there is a lot of volume, especially in the ES, that needs to move from March to June. So this is another risk. Yeah, so what I mentioned, headline, geopolitical, but the biggest risk for me and the biggest thing that I want to always touch on that is not that. The biggest risk is a signal. I mean, we are in a bearish trend. All ranges are sloping down. Market shows no signs of wanting to reverse. Yes, a bearish trend sloping down, and yeah, high highs. For me, it still doesn't matter what's happening in the world. You can think that what Trump is doing is great and the future will be great, or you can think that what he's doing is bad and it will collapse everything. Doesn't matter. Doesn't matter. Market is going down, trend is bearish, and for now we are basically testing low end of the range every single day. So do some conclusions for that, for yourself, for your capital. I mean, professionals don't do that. They understand that even if they long something, they either are shorting something based on correlations and other ideas, or they hedge, or they use derivatives to have exposure, or they just need to buy just because their mandate is to buy. I mean, pension fund or whatever. But retail traders love that. Oh, I will buy it and I will hold it, and then they wake up and then I bought at the bottom of the range, and next day market is down another 2%. Yeah, you just bought bearish trend. Congratulations. Don't do that. So yeah, I hope this one helps. And I chose SPY. It applies to anything. It applies to anything, but just look at it. I mean, you know my view that the risk management is most important, and that trading is not predictive, and you need to go where the market goes, or like I suggest to most retail in this scenario, stay in cash. But definitely, whatever you do, it's not going all in and holding overnight and expecting that everything is over, down move is ended, and now we will go to all-time highs. There's no reason. And I know that maybe 4 shows ago or whatever, I said that, yeah, market will go to all-time highs, and it did. But we had all the signals. When we broke the level, market did. But now there is no signal for anything bullish. So I remember one of my mentors said very good advice when it comes to looking at charts, and I don't look at charts much. I look at my signal, but go to if you have an opportunity, go to like 4-year child, show them a chart, don't tell them anything what it is, and show them any chart, and ask them what they think this chart will do next. And when you have this very simple mindset about the price, or they will tell, well, you know, when market reaches a bottom, they will see some pattern, they will say price will go up. Same applies to price will go down. Don't try to stare at charts and find some signals that don't exist, that are trying to basically predict the future. Don't predict the future. save yourself capital and don't try to catch bottoms. Don't try to catch bottoms. For example, if we get some different scenario, and actually price goes to here, and we are still in the bearish trend, which obviously we would do if it happens, let's say tomorrow. If it happens later, we don't know, because the signals will change quickly. But if it would happen to, I would do the exact opposite. I would sell call spread, because we are in a bearish trend, and I think that we need to go down. Exactly the opposite. Not put spreads. Put spreads are basically, if you are selling that market, even if it falls, it will not fall way below. Call spreads would basically tell the opposite, that even if it goes up, it will not go up by a lot. But it's a limited risk. And I really wanted to touch on that, because I know that buying bottoms, trying to buy bottoms and catch bottoms is very sexy in the retail space, especially. And in this environment, again, look at stock bond correlation. Look, you don't need fancy matrices or tools on TradingView or so on. Just make a watch list of gold bonds, major stock indices. If you are trading international ETFs and so on, and just look where they are going, because now you can do that on the MFR, by the way, with a colon. But now just look at this thing. And it's a good idea. It's a good trading idea. Definitely not terrible, but definitely maybe not exactly here, but you can do the same. These blue lines is upside downside ratio. On spread, it's of course low, so it just, for this presentation, ignore that. But yeah, I mean, look ratios, long XLU, short IWM. How it behaved? It's bullish trend since the beginning of February. XLU SPY, because I look at these all the time. Even more often than, for example, when I look into individual equities. I want to see that. IWM looked way stronger, and from the beginning of February. SPY was quite choppy, but still, let's just take a look at it. It's bullish. Now it's bullish. Of course, the range is not good for bullish position, but watch ratios. Don't trade these ratios, because it's quite complicated. I mean, if you trade ratios, you usually want to do equal weight. If you trade spreads, then spreads would be a different thing. It would be with a minus sign, not a division sign. I mean, here you would trade it on a per share basis, but basically it's the same thing. And because this spread doesn't move much, I mean, it will show that it's always neutral trend, because there's no trend. But in the shorter periods, there is trend. But for retail, especially for retail, do divisions. And divisions, you just need to understand what it tells you. You don't need to trade that, but you just need to understand what it tells you. Like a forex pair, like anything, there is a denominator, nominator. I mean, the one on the left is a long, the one on the right is a short. And if a chart is going up, it means the one on the left is outperforming the one on the right. That's all it is. But look at that, and I don't know, because it's a XLU IWM, so I mean, it's a defensive versus small cap. You can quickly understand. So what regime are we in? Well, definitely not risk on, because when we are in risk on regime, because yeah, now let's get rid of these. It's hard to see things, because in the long term, and I know that now this chart will look like a mess. Well, in the long term, this chart definitely doesn't go up. Definitely doesn't go up. But in the currently and in the midterm to short terms, well, I mean, this chart is going up for a year. It's literally March 2024. So another idea how to look, because I saw questions about how I view regimes. It's way simpler than other people do, because I don't monitor inflation. I don't monitor GDP. I'm not a macro. I don't pretend that I am an expert in these things, and other people are doing way better job. For me to understand what the regime is, market is doing a very good job. Market is forward looking. I just look what stock bond correlations are doing and where the capital is flowing. And yeah, it's enough for me. So yeah, it was a long one, and as always, when I start ranting, it's a problem. So the main point from this is don't buy dips in bearish trends, and if you do, for one reason or another, do it with managed risk, and don't go to sleep with all-in long positions when we are in a bearish trend. It's not a good idea. And don't get me wrong, it's also not a good idea to go to sleep with all-in bearish positions. It's a good idea to be cash overnight. So for most people, it's cash and bonds at all. And for those who really want to trade, which, I mean, you need to think if you really want to do that, but do that intraday. Because what is a dispersion? Yeah, I wanted to touch on dispersion. I will be very quick. Dispersion index, this is on a S&P constituents. It's quite a new thing. I have my version that I calculate myself. It's quite an easy thing. The CBOE does it with options. I do it with prices, but it's different. So, think of it as another version of VIX, another version of volatility metric. But basically, what the dispersion is, they take biggest constituents in S&P 500, and they see how their basically implied. In this case, it's implied move. You can do it with realized move, but the point is the same. We're looking at what moves are market expecting, or what moves are happening, and how they compare to the mean. And in this case, mean is SPX index itself. So it means big dispersion means that stocks don't move the same way as a index itself. A lot of stocks are going up, a lot of stocks are going down. When stocks are going to the same direction as index, they are doing it in a very different magnitude, and so on. So with dispersion 34, it's a stock pickers market. Stock pickers market is, it means that now the trade for those people who really want to trade, the trade is not in indices. The trade is not in indices. Trade is in individual names, and of course long short, because if you are going to only one direction, well, guess what? So put spreads, call spreads are better in the case just because they are limited risk. I just wanted to touch on that. Dispersion is huge, and that is another reason that I said that, come on, it's not a coordinated thing, and capitulation is not happening. Not even close. So yeah, I think I'm done.
Thank you, Vai. Thank you. Regarding the the scripts you you mentioned, they're actually published on TradingView, but I'm waiting for TradingView because I publish them openly, meaning they are not hidden like my scripts, because we kept getting strikes, right? And we were afraid the account would be banned. But these ones I felt confident to publish, so I published them. I'm just waiting to be sure we don't get flagged before opening to users, because I have to open manually to so many people if it's just to get flagged right after. So, but they are published, okay? And if no problem, by tomorrow, I will open to our users. So they will get access to correlation matrix and also to the Hurst exponents combined script. Now quickly, I'm going to check for questions because I saw one, and then we can wrap it up. So yeah, Hani was asking about VIX trade and trend setup on the daily. So yeah, of course, this is the reason why I tried twice to buy the dip, and I have many signals saying buy the fucking dip, but I'm also seeing a VIX trade and trend crossing. So yeah, it's not good. Basically, what you want to look for in the next 3 days, can VIX break at least to neutral trend, MFR neutral trend, at least. If we can get that for the next, let's say by next Wednesday, we don't have, it's still above MFR trend, and you have a trade and trend crossing, hold your bottom. Because this thing is gonna get very painful. So, yeah, that's basically my thinking right now. So yeah, watch until Wednesday. I say it should be enough. If we are still above MFR trend, we are definitely going to 40 something. If we are back to neutral, then I mean, let's see. I mean, Vi will post some stuff. I will post some stuff on Twitter, and maybe on the next show we'll say, okay, let's get back in. The bull is back. We will see. I mean, for now, like Vi say, no capitulation, right? It's orderly selling, and you want to wait for capitulation, especially in the bear market. So that was the only question.
Yeah, because I will be very quick, but what I also wanted to mention and very quickly, that watch the momentum score, and especially the momentum score for 30 days and 90 days. So because now, for example, for SPY, yeah, of course, the 10-day momentum score is -2. -2 is technically that level where I would say for SPY it's coming close to being oversold. Yeah. First of all, of course, markets can stay oversold way longer than you can try to buy the dip. But no, in this case, watch them all. Because, for example, a 30-day momentum score on SPY is not oversold at all, and 90 days is not even close. 90 days like -0.5. So, and a lot of these same signals on other assets. So, two things: watch momentum scores. You want at least 30-day to be oversold, and not only be oversold, but when you want a reversal. Yeah, so of course, maybe bottoms will happen when momentum score is negative. But I'm talking about the slope and the rate of change. If values in momentum, then you can see it on the chart very easily. So if values on momentum score are still going down, so going lower, it's bad. But when values on momentum score will reverse, even if it's still negative, but let's say it was -2, then -1.9, -1.7, blah, blah. You see this reversal for at least a couple of days. Then with a very tight stops, and in this market outright, you can't do tight stops because these stops will be taken out. So I'm doing it with, I would do it with put combinations or call combinations, but then only then, never go. So my quick tip is never go against momentum score. Of course, don't wait all scores to be positive, because when it will happen, half of the move will be already done. But never go against. I mean, never go against momentum score directionally. If you want to buy something, buy when momentum score is going up. Yeah. It was just another thing when I said that capitulation is not there, and at least SPY is not oversold. It's not oversold. So it can go, believe me. And of course, anything can happen. I mean, market will go where it wants to go. But for those who are always trying to follow the process, which of course, and process has multiple legs, different signals that are combined together and so on. So for those at least who want to follow the process, at least don't fight the momentum score, because this thing is literally going down every single day. So come on. Yeah, and that's it from me. I just wanted to touch on that.
Thank you, Vi. Thank you, guys. So I guess we see each other back in 2 weeks, and Maybe we'll try to do a Tuesday so that Matt can hop in because he can't on Thursdays. So we should have Ted and Ted back and maybe Matt. And maybe next time also we can have back Raghav. Long time no see.
Yeah.
Thank you.
So current SPY longer term range is 535.
Yes,
In 2 weeks we will see if we.
Bad. It's bad. It's very bad. I mean, it's not good, right?
Yeah. So what I wanted to say as a more of a joke, in 2 weeks we will see if market is below 535 or not. So, okay, everyone.
Yeah, actually, I have a question for you, Vi, because I mark all those levels for contract settlement, and I see
it's my magic.
The next one is below, right? I mean, it's like 50 points below on yes or something like that.
Yeah, I can quickly show it to people.
It's June. It's June, the next one, the closest one.
Yeah. Wait, I need to press a button. Sorry. Okay. If we go to ES, if we go to most likely it was M. Yeah, I think it was June. Yeah, it's not that far. It's not that far. 54.72.
Yeah, I have that one marked. I'm like, because I saw yes go to some of them, and I was like, come on. I mean, you at least show some resistance. And it was like, maybe.
Yeah, but
and actually, it used yeah, I think it was NQ. NQ used the one of the contract as resistance.
Oh yeah, but NQ and Russell are lagging even more because look, this is the equivalent. So June 2024, correct? Yes. So NQ is trading way below this, so we can even check NQ March 2024. Sorry. Yeah, I mean, this is the level, and this thing looks scary. I know. Don't tell me it looks scary. Yeah, but of course it's a major levels. These are major levels. We have plenty of levels in between, so don't be scared. It doesn't mean that even if it goes to this level, it doesn't mean that it will do it in a straight line. It's never a straight line. But yeah. So let's not scare people. Because believe me, Russell looks also very scary.
Okay. Yeah. Let's wrap it up. Okay, thank you guys. So see you in 2 weeks.
Yes, see you everyone. Thanks, Raphael. Thanks everyone for joining, and I hope it was useful. Manage risk. Don't try to catch a bottom. If you decide to catch a bottom for one reason or another, choose tools that will not make you lose all your money. So yeah, see you in 2 weeks.